if he gets any edge when I leave, I'll resent it. So the amount of cash we have, we would spend, well, we came pretty close to spending $10 billion not that long ago, for example. But we'd spend $100 billion. I mean, and those decisions are not tough to make.
Behind every $1 million investor is a playbook, strategies, habits, and decision-making frameworks that allow ordinary individuals to generate extraordinary wealth. These investors aren't just lucky. They follow step-by-step principles that compound knowledge, opportunity, and capital over time. While Wall Street headlines celebrate instant success or market swings, the reality is that wealth is built consistently, strategically, and intentionally. Today, we're breaking down the playbook of $1 million investors, showing you actionable steps you can implement to emulate their success. Step 1 in their playbook is setting crystal clear financial goals. $1 million investors begin with precise objectives: how much they want to earn, the timeline for their goals, and the level of risk they're willing to take. Clarity provides focus, motivation, and a framework for decision-making. Warren Buffett didn't become wealthy by vaguely hoping for growth. He defined targets and measured progress meticulously. Clear goals also guide investment strategies, whether you're in stocks, real estate, or business ventures. Without defined outcomes, even disciplined investing can become aimless. These investors know that success begins with knowing exactly where they want to go, then building the roadmap to get there. Step 2 is understanding and managing risk. Every investment carries uncertainty, and $1 million investors don't ignore it. They study, measure, and mitigate it. Elon Musk, for instance, risked personal capital but structured investments strategically to minimize total loss while maximizing upside. They diversify portfolios, conduct thorough due diligence, and allocate resources according to risk tolerance. Risk management is not about avoiding risk. It's about taking intelligent, calculated steps that protect capital while seizing opportunities. For anyone looking to emulate these investors, mastering risk is essential. Without it, even brilliant opportunities can become catastrophic mistakes. Step 3 is focusing on value over speculation. $1 million investors look for assets that provide real measurable value. Warren Buffett buys businesses, not stocks, emphasizing intrinsic value and long-term returns. Cathie Wood invests in disruptive technologies that have growth potential beyond short-term market fluctuations. The lesson: wealth isn't built by chasing trends or hype. It's built by identifying opportunities where value is underpriced and the potential for growth is substantial. This focus allows investors to make rational decisions even during volatile markets, giving them an edge over those who follow crowd behavior. Step 4 is consistent research and education. Every $1 million investor dedicates hours to learning, studying industries, financial statements, market patterns, and emerging trends. Ray Dalio reads history, analyzes cycles, and observes behavioral patterns to inform decisions. Continuous learning fuels confidence and insight, enabling investors to spot opportunities before others. Knowledge accumulation compounds like capital. Small, consistent learning habits over years create a significant advantage. The playbook isn't just about money. It's about investing in your ability to understand markets, people, and strategies more deeply than competitors. Step 5 is strategic diversification. $1 million investors don't put all their eggs in one basket. They spread exposure across asset classes, industries, and geographies. Diversification reduces risk while providing multiple streams of growth. Howard Marks emphasizes balancing risk and return, ensuring that portfolios remain resilient in downturns. Diversification is a defensive and offensive strategy. It shields wealth while allowing investors to capitalize on opportunities in multiple areas. Anyone following this playbook should assess how investments correlate, avoid overexposure, and seek complementary assets that compound wealth across cycles. Step 6 is discipline and execution. $1 million investors don't deviate impulsively based on market noise or emotional reactions. They stick to their strategies, review performance periodically, and adjust based on data, not panic. Jeff Bezos reinvested Amazon's profits consistently despite public pressure. Elon Musk persisted with Tesla despite skepticism. And Buffett maintained long-term holdings through volatility. Discipline ensures that short-term fluctuations don't derail long-term plans. Without it, even well-crafted strategies collapse under pressure, and potential wealth is left unrealized. Step 7 is leveraging opportunities during crisis. $1 million investors recognize that market downturns aren't just threats, they're chances to acquire undervalued assets. Warren Buffett bought stakes during financial collapses, and Cathie Wood positioned funds during market disruptions to capitalize on accelerating trends. Crises magnify irrationality in the market, creating gaps that prepared, decisive investors can exploit. This requires courage, analysis, and timing, the ability to act decisively when fear dominates others' behavior. The lesson is that adversity often reveals the most profitable opportunities, and those willing to act benefit exponentially. Step 8 is compounding capital and reinvesting profits. Million-dollar investors treat money as a tool that grows exponentially over time. Buffett's strategy of reinvesting dividends, interest, and profits compounds wealth beyond simple accumulation. Similarly, savvy business investors reinvest earnings into ventures or innovations rather than spending them prematurely. Compounding requires patience, discipline, and a long-term mindset. Small, consistent reinvestments can multiply over decades, illustrating that wealth isn't built overnight. It's built by strategic, repeated action over years. Step 9 is maintaining emotional intelligence and control. Markets test patience, resilience, and emotional stability. Million-dollar investors separate emotion from analysis, avoiding panic selling or impulsive buying. Ray Dalio emphasizes observing one's own behavior to prevent cognitive biases from influencing decisions. Emotional control allows for rational decisions during volatility, turning stress into clarity. Investors who act impulsively rarely replicate consistent success, while those who master psychology gain an edge that magnifies financial returns. Emotional discipline is as important as analytical skill in the playbook. Step 10 is networking and mentorship. Even million-dollar investors don't operate in isolation. Warren Buffett credits his partnerships and advisors for insight. Jeff Bezos collaborated with experts to scale Amazon, and Elon Musk surrounds himself with top talent to execute complex projects. Relationships provide access to capital, knowledge, and opportunities that would otherwise be unavailable. The playbook emphasizes cultivating authentic connections, seeking mentorship, and exchanging value strategically. Successful investors leverage collective intelligence to make smarter, faster, and more impactful decisions. Step 11 is embracing innovation and technology. Million-dollar investors understand that disruption creates opportunity. Cathie Wood invests in AI, genomics, and renewable energy, while Elon Musk builds technologies that redefine industries. Technology accelerates growth, efficiency, and market penetration. Investors who integrate innovation into strategy stay ahead of competitors and multiply returns. Ignoring technological trends risks obsolescence. The lesson is that staying informed, agile, and willing to adopt new tools transforms potential risk into strategic advantage. Step 12 is strategic patience and timing. Timing is critical in investing. Knowing when to enter, hold, or exit positions can define success. Buffett often waits years for the right opportunity. Musk times production and funding strategically, and Wood aligns investments with trend acceleration. Strategic patience ensures that actions are deliberate rather than reactive. Million-dollar investors understand that haste erodes returns, while careful timing amplifies them. Patience allows for compounding, market cycles, and value realization to align in your favor. Step 13 is giving back and reinvesting in communities. Philanthropy and social impact don't just define character, they influence reputation, networks, and long-term opportunity. Many investors reinvest part of their wealth into ventures or initiatives that benefit society, creating goodwill and long-lasting influence. Warren Buffett and Bill Gates demonstrate how reinvestment in social impact complements financial growth. This step ensures that success creates both wealth and meaningful legacy, transforming investment beyond mere profit into broader influence and purpose. By following this step-by-step playbook, goal setting, risk management, value focus, learning, diversification, discipline, leveraging crisis, compounding, emotional control, networking, innovation, timing, performance tracking, alignment, and impact, anyone can emulate the behaviors of million-dollar investors. These principles aren't theoretical. They're proven methods that have generated consistent wealth across decades and industries. Applying these steps requires action, reflection, and persistence. Start small, define your goals, build knowledge, assess risk, and identify high-value opportunities. Reinvest wisely, maintain discipline, and cultivate relationships with mentors and peers. Embrace technology, anticipate trends, and remain patient for compounding to work. By following the playbook, you can turn strategic planning into tangible wealth creation, navigating volatility and uncertainty with confidence. Million-dollar investors prove that wealth isn't about luck or insider secrets. It's about disciplined, repeatable methods applied over time. The playbook transforms ordinary financial activity into structured, strategic action. Each step compounds, accelerates growth, and positions you for extraordinary results. By internalizing these methods, anyone can move from basic investing to building significant, sustainable wealth. The key takeaway: action plus strategy equals opportunity. Million-dollar investors operate on principles, not impulses. Study their methods, implement them, and refine continuously. Wealth isn't accidental, it's engineered. By embracing this playbook, you position yourself to make smarter decisions, seize opportunities others overlook, and build financial security and influence.